Hello and great welcome. So now in this session we are going to start a very comprehensive topic, and I told you, if you remember in the last session, that in case if you develop supreme command of this particular topic, then half the battle is already won. So we are going to take up this particular topic. As I told you, this topic deals with what we call invoicing. Correct? Invoicing. Now what we mean by invoicing and what exactly this topic is all about and why it is so important. So let's have a look over here, and before we move into what we call this topic, let me actually just clarify some concept. What we mean by invoicing, correct? That is the major question. Just give me a second, just a second. Here is some technical issue. Okay, now it is fine. So as far as invoicing is concerned, invoicing simply refers to a technique actually whereby head office wants to hide its profit from the branch. Are you getting my point or not? For example, let us say there is a head office and it has got a branch, correct? And let us say head office is earning a profit of rupees 10 lakh. Now, if branch will come to know that head office is earning such a huge amount of profit, quite obviously, it's a human instinct that branch manager may develop an idea that there is no point in working as a branch manager of this head office. Why not I should start a similar sort of business and earn such an amount of profit? Are you getting my point or not? If the branch will come to know the real profit which has been earned by head office, quite obviously sometime actually it could be a possibility that branch manager may actually develop an idea that why not I should actually start a similar sort of business and what we call get a very high amount of profits. So head office also knows that if the branch will come to know about the reality of the what we call situation, then it could be very much on the cards that branch manager may start a competitive business. So that is the reason actually we do not want branch to know actually what exactly is our profit, and we want to hide our profit, because the first rule of the business is never reveal profits even to your own soul. Is it clear to you or not? So that is the reason. So the technique, as I told you, which is adopted to hide our profits from the branch is known as invoicing. Invoicing. What is invoicing? Invoicing is a technique which is adopted by the head office in order to hide its profit from the branch office. Now the question is how this technique is implemented. Now just pay attention over here. We presume that there is a head office, correct? This then head office. Now this head office sent goods costing rupees 5 lakhs. The cost price of the goods is rupees 5 lakh. Let us say this is the box on which all the goods have been kept, correct? And the cost price of these goods is equal to 5 lakh. This is the cost price of the goods. Whenever head office sends the goods actually, of course the goods will be packed in some boxes. Let us say this is the box. And outside the box we are going to attach a slip. This slip is attached wherein we are going to actually write over there the total quantity which we are sending and the price of these goods. And that slip is known as invoice. That slip is known as invoice. Is it clear to you or not? So head office will stick a slip to this box, and now what head office did, just pay attention. In the invoice, head office wrote that price of these goods is not 5 lakh, rather 6 lakh. Head office knows that the cost price is actually 5 lakh, but in the slip they have written that the price of these goods is 6 lakh. Now what will happen? When the branch is going to receive, or when the branch will receive these goods, when branch will receive these goods and they will look at the slip, so branch will definitely think actually that the price or the cost price of these goods is actually 6 lakh. When branch office is going to receive these goods, because outside the invoice, or in the invoice should I say actually, we have written 6 lakh rupees, so branch will be forced to think that the price of these goods actually is 6 lakhs. Are you getting my point or not? So this way round, what happened actually, we hit the real price of the goods. The real price of the goods actually is 5 lakh. Whereas we are telling to the branch that the price of these goods actually is 6 lakhs. So branch will not come to know about the real cost of these goods, and quite obviously branch will never come to know about the real profit which we are earning. So this is known as invoicing. Now in more technical words, in this case, I would say this way around. Cost price of the goods actually is 5 lakh. Cost price of the goods actually is 5 lakh. And we increase the cost of the goods by rupees 1 lakh because we send the goods at a price of rupees 6 lakh, or we invoice the goods at a price of rupees 6 lakh. So the margin by which we are increasing the price of the goods, we means head office. That margin is known as loading. That is known as loading. You can also call it as margin. It is known as load or loading. So loading means the amount by which you are increasing the real price of the goods. The real price means the cost price of the goods, and you have increased it by rupees 1 lakh, and you are sending it at a price known as invoice price. This is invoice price, and you are sending it at rupees 6 lakh. Is it clear to you? In accounting jargon, in accounting language, we will call it this way around, that cost price of the goods is 5 lakh and the loading in it is actually 1 lakh. That means we have increased the price of the goods, and the invoice price which we are presenting before the branch is actually 6 lakhs. Is it clear to you or not? Now another question which I would love to ask from you. Now you tell me, presume that you are the head office in this particular case, and the cost price of the goods which you know about is 5 lakh, and you increase the price of the goods by rupees 1 lakh, that is known as loading, and you invoice to the branch, you invoice them to branch at a price of rupees 6 lakhs. Now in this case, would you tell the branch that you sell their goods at a price more than 6 lakh, or you will simply tell the branch that you sell these goods at rupees 6 lakh? Now you let me know. Many among you are thinking that head office will tell to branch that you sell the goods at a price higher than 6 lakh. And most of us think so. But let me caution you here. In case of invoicing, we will never ever tell branch to sell the goods at a price higher than the invoice price. We will simply tell the branch you sell these goods at this particular price. Are you getting my point or not? That means in case of invoicing, the invoice price and selling price will remain same. Invoice price will always be equal to selling price, unless and until question specifically states something else. Otherwise, invoice price and selling price will be the same. In this case, head office will send the goods costing rupees 5 lakh at a price of rupees 6 lakh, and it will ask the branch manager to sell the goods at rupees 6 lakhs. Is it clear to you or not? Now what will happen? Now we presume that branch received 6 lakh worth of goods, and because branch was asked to sell the goods at at the invoice price, and branch sold all the entire lot of the goods for rupees 6 lakh, we presume. And let us say all these are cash sales. We presume all these are cash sales. Now, in this case, try to understand. When head office will prepare branch account, now you tell me, because when head office will send the goods to the branch, we will have to write on the debit side, as you know, goods sent to branch account. Now, my question is, should I write here 5 lakh or 6 lakh? Should I write, because I am the head office, I am preparing branch account. Now, should I write here 5 lakh or what we call 6 lakhs? Because 5 lakh worth of goods have been sent to branch at rupees 6 lakhs. For a while, we may think actually that we need to write here 5 lakh. But the problem is that because we have presented the price in the invoice is rupees 6 lakh. So whatever price is written in the invoice, accordingly, we will have to present that price over here. So goods sent to branch will not be written at 5 lakh, rather it will be written at invoice price of rupees 6 lakh. Of course, this is the invoice price. So you need to exercise care over here. We are not going to write here 5 lakh, rather we are going to write here 6 lakh rupees. Is it clear to you? Now, as I told you that branch sold entire lot for rupees 6 lakh. Now, because branch sold all the goods for rupees 6 lakh, if I am going to put 6 lakh over here, now problem is that no profit is getting reflected from the branch account. But actually we know that cost price of the goods is 5 lakh and branch sold out all these goods for rupees 6 lakh. Actually, head office is earning a profit of 1 lakh. But that profit is not getting reflected from the branch account. So in order to find out the profit, what we will have to do, the item which is written over here at invoice price will have to be brought down to cost price. We know that the cost price of these goods actually is 5 lakh, but it is written over here at 6 lakh. So in order to bring it to the cost price, what we need to do, on the opposite side, I will have to write here loading on goods sent to branch account, and loading on goods sent to branch account is 1 lakh. So and remember one thing, loading will always be presented on the opposite side. Loading will always be presented on the opposite side. And the basic purpose of loading is to bring the relevant item to the cost price. So now if I am going to tally this account, I will get a profit of rupees 1 lakh, because that is the reality. In this particular case, head office has earned a profit of rupees 1 lakh. Is it clear to you or not? That's the basic idea of invoicing. So what you have learned actually, you have learned that invoicing is a technique whereby head office actually simply sends the goods at a price higher than the cost price. This way around, head office will try to hide the real profit from the branch. Is it clear to you or not? And very important, under questions related to invoicing, unless and until otherwise stated, your invoice price shall always be equal to your selling price. Is it clear to you or not? If it is clear till up to this particular instance, now we can move over to a question to clarify the further intricacies which are involved with invoicing. It is not so easy. For a while it will take a bit of effort on your part, and once you will become deft in it, then it will be almost like a stroll in the park. 1.6 Invoicing. A head office is there in the Jaipur, and it has got a branch at Kolkata where the goods are invoiced by the head office at cost plus 25%. In the example which I presented before you, I wrote over there very clearly that the cost price of the goods is 5 lakh, and that these goods are being sent to the branch office at a price of rupees 6 lakh. But in practical life, when you are going to get the question, you will not get the question in such an easy language. How will you come to know that this is a question, correct, which is related to invoicing? Because here it is written, and first time we have come across whatever question which we have done so far, never ever before that we came across such a line. Because in this case it is being written over here that head office is sending the goods to the branch at cost plus 25%. That means some margin is being added to the cost price of the goods, and goods are being sent. Is it clear to you? So this is a hint to you that this time this question belongs to the category of invoicing. Is it clear to you? Number one. Number two, further it is stated that all cash received by the branch is daily remitted to the head office. Quite obviously, because whatever cash branch is going to collect, that ultimately will have to be remitted to the head office. All the expenses are paid from Jaipur. I have already told you, under dependent branches, all the expenses of the branch will be met by the head office. And now it is being written, from the following particulars show how the branch account will appear in the head office books. Correct? Now pay attention. Here it is written, stock on 1st of January at invoice price is 12,000. Stock on 1st January is rupees 12,000, and in bracket it is written invoice price. Anyway, next item is petty cash. I told you in the last session about the petty cash. Petty cash is kept by the head office with the branch to meet the routine nature expenses. It is a real account. 3,000. Debtors, opening balance is 30,000. Then it is written goods invoiced from Jaipur is 80,000. Goods invoiced from Jaipur is 80,000. Then here cash sales are written 35,000. Then credit sales are being written over here 52,000. And besides that, over here we come across goods returned by debtors. As you know, goods returned by debtors will come on the credit side of the debtors account itself, because this is a transaction wherein only branch and debtors are involved. Similarly, discount allowed will also come only in debtors account. Then here it is written checks received from Jaipur. Jaipur is the head office, so our head office has sent this time some cash or checks for the purpose of wages, for rent, and for office furniture. Branch might be in need of some office furniture, so head office has sent a check for them to purchase the office furniture worth rupees 1,500. Total 16,500 worth of checks have been sent by the head office to the branch. Further, here it is written checks remitted by head office to branch office towards petty expenses. So some more petty cash has been sent by head office. We are going to simply put it on the debit side of the branch account. Now here it is written branch manager's expenses. Remember one thing, there is a slight difference between branch manager's expense and branch expenses. For the branch expenses, head office will always send the cash. And branch manager's expense means the amount is spent by branch manager out of petty cash available with him. Are you getting my point or not? Branch manager's expense indirectly means petty expenses. Is it clear to you? Further, it is written balance of stock at the end of the year is 20,000 and balance of debtors at the end of the year is 27,000. Now, this is the question before you. Although this is a question related to invoicing. First of all, I am going to solve this question in general usual manner, presuming that this question does not belong to invoicing category. First, I am going to solve it and then I will solve it according to the what we call requirement. Is it clear to you? So, in order to make you understand, first of all, I am presuming that this question is not of invoicing. Are you getting my point or not? So, kindly pay attention here. So in order to solve this particular question, what I am going to do, first of all, I am going to prepare in the books of the head office branch account as usual as we were preparing so far. So this is the branch account which we are going to prepare pretty long just to make you understand thoroughly. And then besides that, we are supposed to prepare the debtors account. So I will prepare debtors account too. So here is branch account. In the books of head office, as you know, we are supposed to prepare the branch account under data system. Data system is still on. Remember one thing, only thing is that now we are doing invoicing. Branch debtors account. This is your branch debtors. Correct? Now let me keep the sheet of the question sheet. Here is the question. A head office at Jaipur has a branch at Kolkata to which goods are invoiced by the head office at cost plus 25%. For a while, forget this particular line, correct? Simply take care of the information which is given below because we are solving this question, first of all, in general usual manner, as if this question does not belong to invoicing category. Is it clear to you? Now, opening stock on 1st of January. Although here it is written invoice price, but at this moment I am not going to do any treatment of invoice price. I will simply write here opening stock. First of all, let me write here opening balances as we normally do. So here I am going to write opening balance, and under the opening balance I am going to write here stock 12,000. First of all, as I told you that I will solve this question as if it is a normal question. Then petty cash balance, I am going to write here petty cash balance happens to be 3,000. So I am going to write here 3,000. Then we have been given debtors. So I am going to write here debtors. Debtors is equal to 30,000. So I will write here 30,000. Because we are preparing debtors account, so we should not let it skip out of our memory that we need to present the balance brought down of debtors over here also. So 30,000 I will write over here 30,000. Now further it is written goods invoiced from Jaipur. So head office has sent goods to branch. It means so goods sent to branch 80,000. Of course it is invoice price. Of course it is invoice price. Is it clear to you? But so far I am not doing any treatment of invoice price. Now cash sales are given to us. As we know, actually cash sales are written under remittances. So I am going to write it under remittances on the credit side. So under the remittances I am going to write here cash sales, and amount of cash sales as you can see is 80,000. So cash sales 80,000 I will write here 80,000. Besides that, we are being given credit sales. Now you know better than I actually. Cash sales is equal to 35,000. I'm extremely sorry. I have written 85,000. Actually, cash sales amount is 35,000. So I will write here 35,000. And after this, we are having credit sales. And you know actually that credit sales is a transaction between what we call branch and debtors, and it will be presented only over here. So credit sales amount is 52,000. Again, now we are being given goods returned by debtors. Now, goods returned by debtors means debtors or customer have returned the goods to the branch. So again, it is a transaction between debtors and branch. It will fall only under debtors account. Goods returned by debtors are also known as return inwards or sales return. So I will write here sales return. That is 3,000 rupees. Then discount allowed. Again, this is a transaction between the branch and the debtors. branch will give some discount to the credit customer so that they pay before the maturity date. So discount allowed in this particular case happens to be 300, so I will write it over here 300. Now it is given in the question checks received from Chapo. Because in the question checks written, so I will write here to bank, and checks have been sent for wages and salaries. So wages and salary is equal to 11,000. Then checks have been sent to meet expenses related to rent, that is equal to 4,000. So I will be writing here 4,000. Further, head office has sent check to purchase office furniture 1,500. Now kindly pay attention. As far as opening balances are concerned, there is no furniture. There is no furniture. However, head office has sent check for the branch to purchase some office furniture. Now what will happen? At the end of the year, when I am going to write here closing balances, I must not forget that now branch is also having office furniture. Are you getting my point or not? Because branch has purchased office furniture, so quite obviously at the end of the year, branch will have office furniture worth rupees 1,500. Then checks remitted by head office to branch office towards petty expenses. So head office has sent some more cash to meet petty expenses to bank. I will write here petty cash. So for the purpose of petty expenses, branch has remitted some more cash, that is equal to 4,000. After this, it is written branch manager's expenses. I just told you a moment ago, branch manager expenses basically denotes the amount spent by branch manager out of petty cash available with him. And in the last session, we talked about this particular fact that petty expenses are not reflected directly. So in order to bring the amount of petty expenses into the branch account, what we are supposed to do, first of all, here I am going to write petty cash. Now opening balance of petty cash you must have seen actually is 3,000. This was the opening balance of petty cash. And just a moment ago you saw actually that head office has sent further petty cash sent. So that means branch manager is now having total 7,000 worth of petty cash. Out of 7,000, now I will write here petty expenses or branch manager's expenses, one and same thing. So branch manager's expenses are nothing but petty expenses. That means out of total petty cash available with the branch has spent, as you can see, 6,900. So 6,900 worth of petty cash has been spent by the branch manager. So that means petty cash closing balance is 100. So we will write opening and closing balance and amount sent, and the difference will be equal to 6,900. Is it clear to you or not? But 6,900 will never ever be reflected directly. Further, we are being given actually closing stock. Now closing stock in this particular case is 20,000. So I will write here closing stock 20,000. Once again, it is written at invoice price 20,000. So I will write here 20,000. Then we are being given actually closing debtors. So I am going to write here closing debtors, that is debtors. Amount of debtors happens to be 27,000. So I am going to write here 27. And because we are preparing debtors account, I will write over here also 27,000. Now your first target should always be to tally your branch debtors account. When I am going to tally my branch debtors account, the debit side total is 82. And from the 82,000, if I am going to subtract 30,300, I will get 51,700. This 51,700 will be your cash from debtors, cash receipt from debtors. Is it clear to you? And we know that cash receipt from debtors is put under what we call remittances. So I am going to write here cash from debtors, 51,700. Now, and all the information we have already incorporated, isn't it? Now, if this question would not have been of invoicing category, my solution would have been completed. But point is that this question is of invoicing. And so far, we haven't done any treatment with respect to invoicing. So what we are supposed to do, now I will clarify each and every point. And you need to pay attention here. I have already told you, once you will become thorough with this particular part, half the battle is already won. Now, in this particular question, first of all, you need to pay attention. Correct? What exactly is the invoicing rate? For example, I will go through the line again. A head office at Jaipur has a branch at Kolkata to which goods are invoiced by the head office at cost plus 25%. At cost plus 25%. Generally, in case of invoicing question, first of all, this question is of invoicing category because this time head office is sending the goods at a margin, at some margin. That means they are adding some margin to the cost price of the goods. That means they are inflating the what we call cost price of the goods and sending it to branch. So that is why this question is of invoicing. Number one. Under invoicing question, the opening lines could be like this. The opening lines could be like this. Kindly pay attention. In this case, it is written that head office has sent the goods at cost plus 25%. So I will write here at cost plus 25%. At cost plus 25%. At cost plus 20%, 25%, 30%, whatever it might be. In this question, it is given that head office is sending the goods at a margin of cost plus 25%. But it could have been given this way around also. It could have been given this way around also. Correct? That head office is sending the goods at so and so percentage, on invoice price. On invoice price. And I have already told you, invoice price and selling price are one and same thing, unless and until otherwise stated. That means in case of invoicing question, you will be given either information this way around that head office is sending the goods at cost plus some percentage, or it will be given this way around that head office is sending the goods at some percentage which is based upon invoice price or selling price. So you have to be very careful at what margin. The margin is based upon cost or it is based upon the selling price or invoice price. First of all, you need to look at it. In this question, if I am going to ask you, your percentage of margin is based upon cost or it is based upon invoice price. Now kindly let me know of that. Sir, it is based upon cost. Yes, very clearly, because it is written here that head office is sending the goods at cost plus 25%. Is it clear to you? So we may say that percentage is based upon the cost. Percentage is based upon the cost. So you have concluded that your percentage here means your actually margin percentage. So that is based upon cost. So you have figured it out. Suppose if I would have had given to you this way round, that head office is sending the goods at 25% on invoice price, in that case, you would have had configured it this way round that percentage is based upon the invoice price. Percentage is based upon the invoice price. Indirectly, it means in case of invoicing, the first thing which we need to figure out is whether the percentage is based upon the cost or whether it is based upon the invoice price. Is it clear to you or not? Now, in this question, because we are dealing with this particular question, and in this particular question, it is clearly written that head office is sending the goods at a margin of 25% on cost. That is cost plus 25%. So we can safely conclude that percentage is based upon cost. Once you are done up with this particular step, your next step will be, you write here cost price, then you write here margin, margin is known as loading, and which is always equal to invoice price. Because in this particular case, your rate of profit or rate of margin or rate of loading is based upon the cost, you will presume your cost price as 100. You will presume your cost price as 100. Is it clear to you? Now, percentage of margin is 25%, so you are going to write here 25. 25% of 100 is 25. So your invoice price will be 125. That means, directly or indirectly, it means if cost price for the head office is 100, head office is adding 25% to it and sending the goods to the branch at a price of 125. Once you have filled the figures under this equation, now the next step is, now you write margin in the numerator and in the denominator you put invoice price. Is it clear to you? You have written 25 margin in the numerator, and in the denominator you have put invoice price. I am shortening it. It will be equal to 1 by 5. 25 by 125 means 1 by 5. Now what does this 1 by 5 reflects? In accounting language, I will call it rate of loading on invoice price. In accounting language, I will call it rate of, this is your rate of loading, rate of loading, rate of loading on invoice price. This is your rate of loading on invoice price. And what does it mean actually? If I will elaborate it, it means if 5 rupees is the invoice price, if 5 rupees is the invoice price, then margin included in the invoice price is 1 and your cost price will be 4. Are you getting my point or not? 1 by 5 means if our invoice price is 5, then margin included in the invoice price is 1 by 5. So first of all, whatever rates are given in the question, I have already told you, rates may be given on cost, it may be given on what we call invoice price. Your first target will be to somehow compute the rate of loading on invoice price. Suppose if in this particular question it would have been stated this way around, that head office is sending the goods, let us say at 25% margin on invoice price. Suppose if it would have been stated this way around, that goods are being sent at 25% margin on invoice price. Because this time I am talking about this particular fact that goods are being sent at 25% margin on invoice price, it means this time your percentage is based upon invoice price, correct? Once you have figured out that the percentage is based upon the invoice price, once again you are going to write the same equation, cost price plus margin. The equation will always remain same. Cost price plus margin will be equal to invoice price. But only difference is that because this time 25% margin on invoice price is written, so I will, and rate is based upon invoice price, so I will presume invoice price as 100. Here the rate was based upon the cost, so that is why I presumed cost as 100. Is it clear to you? And here rate is based upon, let us say, 25% on invoice price. That means rate is based upon invoice price. You are going to presume invoice price as 100. Is it clear to you? Now 25% of 100 will be equal to 25 and your cost will be equal to 75. Once you have filled up all these things, the next step will be to write the margin in the numerator, correct? And in the denominator, you will have to write what we call invoice price. That means your ultimate target, irrespective of the fact, whether the rate is given on cost or whether it is given on invoice price, your ultimate target will be to compute rate of loading on invoice price. In this case, this 1 by 4 will be known as rate of loading on invoice price, because in the denominator we have written what we call, in the numerator we have written a margin, and in the denominator we have written what we call invoice price. So this is your rate of loading on invoice price. Your ultimate target will be rate of loading on invoice price. Your ultimate target will be to compute what we call rate of loading on invoice price. Is it clear to you or not? Just I want to actually satisfy myself whether you have been able to understand it or not. Suppose in a particular question it is stated this way around. Goods are sent, let us say in the question it is stated that goods are sent at 30% margin, on cost. Suppose if it is given this way around, how will you compute the rate of loading? First of all, you need to know whether the rate is given on cost or on invoice price. Now you let me know in this case whether rate is given on cost or on invoice price. Sir, it is given on cost. Clearly, it is given on cost. So once you are confident that you have figured it out that rate is based upon cost, the next step I told you, first of all, always write this equation, cost price plus margin. Cost price plus margin is equal to invoice price. Cost plus margin is equal to invoice price. Once you have written this equation, now you will have to fill it up. Again think, rate is based upon invoice price or cost price? On cost. So you will have to presume cost as 100. And this time 30% is the margin. You will write here 30 and your invoice price will be equal to 130. Once you have filled up this, the next step only remaining is you will have to write in the numerator the margin, and in the denominator you will have to write 130. This will become your rate of loading on invoice price. How we are going to use rate of loading, that's a different matter, but the first thing is that you need to understand how to compute rate of loading on invoice price. Once more, suppose it is given in the question, goods are being sent at 20% margin on selling price. Suppose it is given this way around. How will you compute the rate of loading in this case? Now in this case, first of all, you write the equation cost price plus margin is equal to invoice price. Once you have written this, the next step is to find out and figure out actually whether the rate is given on cost or on invoice price. Selling price and invoice price are one and same thing. I have been telling that time and again. So here selling price written, it means invoice price. So it means actually your rate is given on invoice price. If rate is given on invoice price, you will presume invoice price as the 100. Is it clear to you? Your margin will be 20 and your cost will be equal to 80. But your ultimate target is, as I told you, to find out rate of loading on invoice price. For that, you will have to write the margin in the numerator. In the denominator, you will have to write invoice price, and your rate of loading will become 1/5. I hope you got a fair bit of idea now actually how to find out rate of loading on invoice price. Is it clear to you or not? Fine, sir. Now, because we are dealing with this particular question, and in this particular question it was stated that goods are being sent at cost plus 25%, and accordingly we wrote here cost price as 100 and margin as 25 and invoice price as 125, and then we put the margin into the numerator, and in the denominator we wrote actually invoice price, and 1/5 is rate of invoice price. Is it rate of loading on invoice price? Now, how we are going to use this particular rate? Just a moment ago when I started off this particular session, I told you, in order to find out the correct profit, all such items which are at invoice price need to be brought down to cost price. For example, in the example which I gave earlier, where 5 lakh worth of goods were being sent at 6 lakh. We wrote actually 6 lakh on the debit side of the branch account, and in order to actually bring it to cost price, I told you loading will be put on the opposite side. Isn't it or not? In order to bring it into cost price, correct, all we have to do is that we will have to put the amount of loading on the opposite side of that particular item. Is it clear to you or not? Just to make the point a little bit more clear, just pay attention. For example, in this particular question, your first item is opening stock, and opening stock at invoice price is given to you. It is at invoice price 12,000. Is it clear to you or not? This item is given at invoice price. I will have to bring it to cost price. In order to bring it to cost price, first of all, I need to know what is the amount of margin which is included in the invoice price. Correct? We know that if 5 is in, because our rate of loading we computed earlier, when rate of loading I told you 1/5 means if invoice price is 5, then amount of loading is 1. This is what this particular rate suggests. Is it clear to you? If 5 is invoice price, loading is 1, and if invoice price is 12,000, your loading will be equal to 12,000 into 1/5. Your loading will be equal to 12,000 into 1/5, that is equal to 2,400. That means this is the invoice price 12,000, and in this 12,000, 2,400 is the loaded amount, and if I will subtract 2,400 from 12,000, I will be left off with 9,600, and this item will come to the cost. Is it clear to you? Is it clear to you? So now, in order to do this question according to the requirement, what I am going to do, see here. This is your opening stock. This is your opening stock. Correct? What is happening? Right, this is your opening stock. I will have to bring this item, I must bring this item to the cost price. In order to bring it to the cost price, what I need to do on the opposite side, actually, I will have to write here, loading on, I will write it this way around, loading on or load on opening stock. Now, opening stock is 12,000. In order to find out the loading, all I need to do is to apply that rate which we computed. That is the use of this rate. Now, wherever I need to find out the amount of loading, I need to simply apply 1/5. Is it clear to you or not? So, 12,000 into 1/5, I told you, is equal to 2,400. Loading will always be written on the opposite side. Is it clear to you or not? Another important point, loading is always related to goods. It is not related to petty cash. It is not related to debtors. It is not related to expense. Loading will always be on goods only. After opening stock, you have written here goods sent to branch account. You have written here goods sent to branch account. Now you will have to bring this item to the cost price. So in order to bring it to the cost price, again I will move over to the opposite side, and on the opposite side I am going to write load on goods sent to branch account. This is load on goods sent to branch account. Now 80,000 is the invoice price, so I will apply 1/5 in it, and 16,000 will be the amount of loading. That means 16 minus 80 means 64,000 is the real cost. So we need to bring the item which is at invoice price at cost price, and for the same we need to know and we need to have the rate of loading, and all we have to do is now to apply that rate. It is as simple as that. Similarly, I have already told you loading is always with respect to goods only. Loading cannot be what we call with respect to furniture, petty cash, debtors, or for that instance petty cash. Similarly, what we call sales, no question of any loading. However, there is closing stock. So closing stock is written on the credit side. So in order to bring it to what we call cost price, what I need to know is, here I will write loading. I need to bring it to what we call cost price, and on the opposite side I will write here load on closing stock. Load on closing stock. Now closing stock is 20,000 and rate of loading is 1/5. So now it is equal to 4,000. Is it clear to you or not? Is it clear? Now another important point. Now most of the things you have already understood, but the last point I need to actually make you understand is that loading is only with respect to loading. I have already told you loading is only done with respect to opening stock, closing stock, goods sent to branch account, goods sent to branch returns, goods sent to branch returns. If in the question you come across such items, then you will have to pull out the what we call loaded figure. And similarly, in the upcoming question, we will see even in case of goods in transit, we will have to do the loading. And similarly, goods transferred. We haven't come across any question where goods transferred have been written. But in case, if in the question goods transferred will be given, we will have to actually pull out the loaded part. Is it clear to you? Another important point. Loading is always done only with respect to goods. No doubt about that. But loading is done only in respect to these goods, because these goods travel, these goods generally takes place, or these transactions generally takes place between head office and branch office. Correct? These transactions which I wrote earlier generally take place between head office and branch office. That means loading is done only in respect of goods which are flowing between head office and branch office. Loading will be done only in respect of such goods. However, loading will never ever be done with respect to goods which are flowing between debtors and what we call branch office. For example, sales returns. Sales return are also goods. Correct? And sales return means goods returned by debtors to branch office. But this is a transaction related to branch office and debtors. So in that case, we cannot actually, we should not do any loading. The reason being is that neither debtors nor branch know the real what we call amount. Are you getting my point or not? So loading will be done only in respect of such goods which flow between head office and the branch office. So such goods which flow between what we call branch office and debtors, no question of any loading. Is it clear to you? So as far as solution of this particular question is concerned, now it is over. So in case of invoicing, as you have seen, all we need to do is to find out the rate of loading on invoice price. And once we are done up with that, all such items which are written at invoice price will be actually brought to cost price. And now finally we are in a position to find out the net profit. Correct? Now we are in a position to find out the net profit, which you can find out by yourself. I think 11,100 will be your net profit. Is it clear to you? 11,100, yes, 11,100 is your net profit. So 11,100 will be your net profit. Is it clear to you or not? Is it clear? Another important point, and the last point I have already told you, because I want you to understand this particular part quite well and very comprehensively and very deeply and very insightfully. Because if you are able to understand this particular part, I have already told you, and now you must have understood actually why I am talking about this and why I told you earlier that once you will go through this particular part and you acquire supremacy and high quality command in it, that means half the battle is already won. Is it clear to you? Now see here, the last point is, in case of questions where it will be written that head office is sending the goods at so and so margin on cost or so and so margin on invoice price, quite obviously such questions will fall under the category of invoicing, no doubt about that, isn't it or not? However, you also need to understand that if the question is of invoicing, then all the items which are related to goods which are given in the question, for example, opening stock, goods, closing stock, goods sent to branch, goods returned, all such items you will have to presume that they are at invoice price, whether invoice price is written or not. For example, in this particular case, opening stock at invoice price clearly written. Now my point is that because this question is of invoicing, and even if word invoice price would not have been written over here, I would have still presumed that this item is at invoice price. Is it clear to you or not? Are you getting my point or not? What I said, if the question is of invoicing, in that case all items which are related to goods will be presumed that they are at invoice price, irrespective of the fact whether word invoice price is written over there or not. Is it clear to you or not? So if it is clear to you, then I've already told you half the battle is already won. So once we are thorough with this particular question, now we can move over to the next part. And in the next question, which is 1.7, let's see actually what exactly the things are given to us. Here it is written, Stern Winds is having their head office at city K and they have a branch at city M. And the head office invoices goods to the branch at cost plus 25%. At cost plus 25%, head office is sending the goods. This question is of invoicing, number one. The first thing which we need to figure out, the rate is based upon cost or on invoice price. The rate which is given to us is on cost. So I will presume cost as 100 and margin will be 25 and invoice price will be equal to 125. Is it clear to you? Further, it is written that following are the transactions of the head office with respect to branch. So these transactions are given to you. Now, first of all, you are being given opening stock at branch at invoice price. Now, my point is that even here, if the word invoice price wouldn't have been mentioned, still you would have had presumed that it is at invoice price because this question is of invoicing. So 12,500. Then we have debtors balance 5,000. Then we have petty cash here 1,000 rupees. Then goods supplied to branch at invoice price is 40,000. Goods returned to head office is 5,000. Even in case of goods returned, you will have to do the loading. Remember one thing. Then cash sales are given to us. Cash receipt from debtors are there. Bad debts. Bad debts, I have already told you, it is considered as a transaction between branch and branch debtors. So that is the reason. That is the reason actually it will be put only on the credit side of the debtors account. Allowances to customer. Allowances to customer is a sort of rebates or discount given to the what we call debtors. So again, this item will find place on the credit side of the debtors account. Return inward. Return inward means sales return. So sales return, in fact, all these three items, bad debts, allowances, and what we call return inward, you are going to put on the credit side of the debtors account. Then rates and taxes, salary and miscellaneous expenses, of course. These three items, for these three items, head office is going to send the cash and you are going to write on the debit side. Then we are being given closing stock, then sundry debtors, and finally petty cash at the end of the year. Because this is the second question of invoicing, so let me actually do this question for you once again so that you understand it better. So in this particular question, whenever we are going to solve the questions related to invoicing, your first target should be to do the rates analysis. So rates analysis. Rates analysis. Here I am going to write rates analysis. When I say rates analysis, first of all I am going to write here cost price, then I am going to write here load or margin, whatever you may like to write. I have a habit of writing margin, and then invoice price. Now I will have to look very carefully and deeply into the question and try to figure out whether the rate is given on cost or on invoice price. Now you tell me, in this particular case, rate is given on cost or on invoice price. Sir, it is given on cost. Correct, absolutely. Because it is given on cost, I will have to write cost as 100. Is it clear to you? Now margin 25% is given, so I am going to write here 25 and the invoice price will become 125. Now all I need to do is to write the margin in the numerator, and in the denominator I need to put actually 125. So this will deliver me rate of loading on invoice price. And the use of this rate is that we will have to apply 1/5 to an item which is at invoice price to pluck out what we call its loaded part. Is it clear to you or not? Now, we will prepare what we call ledgers in the books of the head office. So these are the books of head office, books of head office. So in the books of head office, as you know, we are supposed to prepare the branch account. So I will be writing here branch. So I will write here branch account. This is my branch account. And where is the, just give me a second. This is the branch account. So I will be writing over here branch. To make you understand, I am preparing it a little bit longer, and then branch debtors. Correct? This is my branch debtors account. I cannot go through the question. Let me pick up this question sheet. This question is invoicing question 1.6 we did, so that means we are doing 1.7. Eastern Winds? Yes, it is. Eastern Winds. So Eastern Winds is having their head office at City K, and they are having a branch at City M, and the head office invoices goods to branch at cost plus 25%. The following are the transactions. So stock, so first of all I am going to write here opening balance, correct? So opening balances. Under the opening balance, I will be writing here opening stock. As you can see, opening stock happens to be 12,500. Now the moment I am going to write here 12,500, now henceforth, in case of invoicing question, immediately you bring down the loaded part. So on the opposite side, I would advise you to write this way around, load on opening stock, load on opening stock, 12,500. And we just computed rate of loading on invoice price is 1/5. So your amount of loading will be equal to 2,500. Now let me tell you also, in order to bring down in order to pull out the loaded part, we can also write, instead of writing load on opening stock, we can directly write stock reserve. We can also write stock reserve. Is it clear to you? We can use the word stock reserve also for the purpose of unloading the loading amount of what we call opening stock. Or you can simply write it this way around. Then we are being given debtors. No question of loading on debtors. Now debtors is equal to 5,000. You will simply write here 5,000, and because we are preparing debtors account, make it a habit of immediately writing in the what we call debtors account also. That is 5,000. Now in this particular question, we are being given actually petty cash too. So I will be writing here petty cash. Amount of petty cash is actually 1,000. So I will be writing here 1,000. Besides that, we are being given goods supplied to branch at invoice price. So I will be writing here goods sent to branch. Goods sent to branch. Obviously, it is at invoice price, because question is of invoicing. Irrespective of the fact whether invoice price is written or not, I still would have had presumed that it is at invoice price. Now I will have to bring down the loading. In order to bring down the loading, I will have to move to the opposite part. On the opposite part, I need to write here loading on goods sent to branch account. Correct? So you can straight away write the what we call loaded part. I have a habit of making you understand better, so that is why every time I am right here this way around, 40,000 into 1 by 5, 8,000 will be your loading. Now we are being given goods returned to head office. Head office has sent goods to the branch and branch has returned those goods. So first of all, I will be writing on the opposite side goods sent to branch account returns. So these goods have been returned by branch. So returns. So amount of returns in this particular case is 5,000, right? 5,000. Because this is related to goods and its loading will also be done. So on the opposite side, I will be writing here load on. Load on. Goods sent to branch returns. Goods sent to branch returns. Correct? So 5,000 into 1 by 5, you will write here 1,000 rupees. So 1,000 will be the amount of loading. Loading is always done on the opposite side. Is it clear to you? Then we have got cash sales. Obviously under remittances, we are going to put it up over here. Remittances. As far as remittances are concerned, we have been given cash sales. So I am going to write here cash sales. And amount of cash sales is equal to 12,000 only, right? 12,000. So I will be writing here 12,000. Because we do not prepare under data system cash accounts, so no other posting is required with respect to cash sales. Similarly, cash receipt from debtors is also given in the question. So cash from debtors, you are going to write here cash from debtors. Cash from debtors is equal to 30,000. So you are going to write here 30,000. And because we are preparing debtors account, we must not forget to put it over here. Cash 30,000. Cash 30,000. Correct? Then we are being given bad debts, allowances and return inwards. I just told you a moment ago, all these three items will be put on the credit side of the debtors account. They are put on the credit side of the debtors because they are going to reduce the balance of the debtors. Bad debts 2,000. Then we are being given allowances. Allowances to customer means some rebates or discounts to debtors. So allowances you are going to write over here 1,000. Then return inward. Return inward means sales return. Sales return is equal to 1,000. Correct? Then we are being given some expenses, rates and taxes, salary and miscellaneous expenses. So I will be writing here to cash. So head office will send cash to meet these expenses. One is rates and taxes. And rates and taxes is actually 3,000. And then we have salaries. So I will be writing here salaries. Amount of salaries is equal to 8,000. And then miscellaneous expenses. Miscellaneous expenses is equal to 1,000. Correct? And then it is given stock at branch. So we will we'll move over to the opposite side. First of all, I will be writing here balance carried down. Under the balance carried down, I will be writing here closing stock. And the amount of closing stock happens to be 15,000. So I will write here 15,000. The moment I am going to write 15,000, it should strike me that this item is related to goods. Obviously, invoice price is written or not, irrespective of that, I just told you, you will have to presume that it is at an invoice price. So you must pull out its loading, and for pulling out the loaded portion, you will have to move to the opposite side, onto the debit side, and over there you will write load on closing stock. So the closing stock amount given to us is 15,000, and now I will be writing here 1 by 5. So the loading amount will be equal to 3,000. Is it clear to you? Now we are being given closing debtors in this particular question. Now closing debtors at the end is 4,000 rupees. So I will be writing here debtors. Amount of debtors in this particular case is actually 4,000. And closing debtors will be written in the debtors account also, 4,000. And finally, we are being given petty cash balance. So we will simply write here petty cash, nothing else. Petty cash balance is 1000. Now, in this particular question, honestly speaking, if I am going to, first of all, tally debtors account, I am not going to get a figure which is of much importance, because all the three items, opening balance, closing balance, and cash received from debtors, which we generally put in the branch accounts, are available in the question. Anyways, if you are going to actually tally it, you are going to get credit sales. And the amount of credit sales will be equal to 33,000. However, we are not going to post credit sales anywhere else. As you know, actually credit sales will not find place in the branch account. And now, finally, we are going to actually tally it out. And if we are going to tally it out, your net profit will be equal to 3,000. Net profit. Net profit will be equal to 3,000. I hope I have been successful in making you understand the what we call all the intricacies which are involved with respect to invoicing. Correct? I hope that you must be feeling a little bit what we call now confident of tackling questions related to invoicing. So shall meet you in the next session. Obviously, we are going to stress the discussion to some further limits in the upcoming one. So till then, it's time to say goodbye.